Hello guys, welcome back to the channel. Today I'm doing my options portfolio weekly review. This is where I go over all my trades for the week, good and bad. I put everything out there. And this week I actually did realize over 25,000 in realized losses on one day, which is a lot. And at the end of the video I'll talk about those positions specifically, as well as what I'm trying to learn from those positions and how to avoid that in the future. And to start this off, I'm going to talk about YouTube has been missing some comments recently. I got alerts from Sudhakar Swaminathan, and I saw that he put comments on, but when I went to go respond to them, they weren't actually anywhere. They're like invisible, I guess. I don't know. So that's something to be aware of. Is like some comments on YouTube are just being lost, and so I took a screenshot of the alerts I had of it, so I could respond to him here. And he was asking if I use anything called Zeebs, which I've never heard about before. So I did a quick search on YouTube and found a Tasty Trade video. Seems like an interesting strategy, but something I see right off the bat is like you put it on 6 contracts. That's a lot of commissions. So what do you know? A broker's over here pushing you to put on more contracts so they collect more commissions. I don't know. It does create a pretty neat P&L, but you do need like a 20-point movement to the downside before your hedge kicks in. But I don't know. It could be worth looking at. And for your second comment, yeah, if you want to keep the position on, you just close it, open up a new one. You've seen me do it multiple times. I just finally lost my diamond hands and got rid of that in on Baba. But yeah, essentially you just keep doing that, and it puts yourself in a better position for getting the full gain if if the stock goes up $1 in your direction. Whereas because it went down, your delta's lower. You wouldn't get the same thing if you didn't adjust the zebra. So that is how you adjust the zebra. Is you just close it down, put a new one on, and enjoy the gains again. First off, here are my daily close snapshots. Monday went down about 21.41. This was the day I was closing a bunch of stuff, so I did lose a little bit to the bid and ask when I was getting out of position, so that might be a little inflated because of me closing down some positions. But then, hey, we got 2 green days this week. That's better than last week. Pretty flat for the rest of the week. Progress report review. You can see I lost another 2,400, but I think I got rid of the positions that were bleeding my portfolio, so that's kind of locked in and done. This actually puts me all the way back to like May, I think it is. Yeah, May 21st. So I've lost about 5 months of progress in my portfolio due to just a couple positions and oversizing in just a few spots. And for those of you that were wondering from last week, I was like, I would wonder if could make up some positive months for October. Spoiler alert, I don't think I'm going to make up 13,000 realized gains this month. So we may have three negative months in a row, most likely, and we'll see what happens in November. This week's trades, obviously you know this was coming, so Monday, I just wasn't feeling too good about the bottom positions, and I decided to just close it all down. I think it just became too big of a position in my portfolio where I was just bleeding and bleeding and bleeding. I was just tired of looking at it. So decided to stop diamond handing it and close it down. Even if it went up, I wasn't going to regret closing it down and repositioning my risk. And in hindsight, Baba shot back up to 162. So this Baba position here would have been up about $1,000 total, or actually $2,000 total, instead of being a $9,000 loss. So that's $11,000 swing. So I shouldn't have looked at my portfolio on Monday, but yeah, so I took that down. November risk reversals, I decided to just close those anyway. I don't know. I was just in an emotional state, like let's just wipe it all out. Even though theoretically this position should have been an easy win if I just held on forever, as long as it doesn't get down below 120. But when I closed these positions, I was thinking, what if Baba did go down to like 100? I don't want to have 400 shares at 120. So I just close it all. Probably not the best decision to close that one, but I made it. Got to live with it. Move forward. Wish the stock repair strategy. Since I was getting rid of the shares, I was closing out my Wish position as well. I closed down the stock repair strategy. That did get me $97. So hey, the stock repair strategy worked. I guess $100 doesn't quite offset the $9,600 loss from the shares, but I mean it's still $100. Can't complain too much, right? Also closed down TME, save the $1,000 or whatever was left in that position, and just gonna stay away from China. I'm not gonna play Wish for a while. Like these stocks, I just got too big into them for like sizing, and they've been distracting me from making other plays that been hitting like consistently besides this. So close them down and just focus on making my money back in other plays. That's basically what I decided to do. On Monday, I also sold the Palantir 20 puts. I think I said that in my video on Sunday that this is one of my top 3 positions I was going to look at. So I did put that one on. I already had the X play on, so I did have 2 of those 3 on now. So there you go with that one. I did have a Netflix bear call spread. I already forecasted that if it was up, I was probably going to close on Monday. It was up. I closed it, and then the following day, Netflix shot up to 640. So talk about timing the market in a good way for once. Look at all that red. Tuesday, I saw KMB drop down, and I could pick up a leap for 32.75 when KMB was sitting at 132. So there's only $75 of extrinsic value on this leap. I decided to pick those up and make some PMCCs because I could sell pretty close to the money and have a break even if it gets shot through on the short call. So it just seemed like an easy play. I'm glad to be able to put on a PMCC again. It's been a while since we've seen one of those come up. Thursday, I sold some puts on Nusi. I was going to pick up 500 shares. I was like, you know what? Let's just go sell a put. If it goes in the money, then I collected that 25 cents, which is more than the dividend itself for the month. And if it doesn't go in the money, well, then I just collected that money anyway. And so it seemed like a no-brainer to just sell the put. If I get assigned on November 19th, I'll have the shares in time to get the dividend for November. So I'm doubling my dividend in Nusi in November if I get assigned or if I get put the shares. So that's kind of what my thinking was there. I was going to buy some more shares, so why not do it through a put? And that's what I did. And then I took the premium and went ahead and bought 5 shares with it because that's about what the premium I received was. So buy 100 shares, get 1 free. So I bought 500, or I might buy 500, but worst case scenario, I got 5 shares free. Friday, from our Discord talk on Thursday, James Rowe mentioned a couple stocks and positions, and I did like his Chewy and BMY ones, so I went ahead and sold some puts on those. So Chewy, I did the November 26.61 put. I'm promising to buy 100 shares at $61 each if Chewy's below that. And for doing that, I got a hefty credit. If I do get assigned, I will take assignment of these shares. I won't roll this position, and also cover calls. I think Chewy at that level will be a great buy, so that's why I was fine selling closer to the money. I think Chewy was at 63 when I put this on. Normally, I would have been aiming for like 58 or lower for selling a put that I didn't want to get assigned on. But this one I wouldn't mind, so that's why I sold it closer to the money. And it gives me a little break-even room here, because I cooked a pretty nice premium for doing that one. And then BMY, I was debating about doing the 55 put, but since I'm not too familiar with the stock, I went a little safer, did the 52.50. Still got that 1% return on risk, so that's why I chose that one. And then on Friday, I saw Netflix had like some insane premium, even though they already established a new top that it didn't look like it was going to break through. So I bought a bear call. So I sold the 650 put. I bought the 660 just in case I was wrong, because we see up there that can actually happen. And sure enough, like 3 hours later, Netflix went down. My profit taker order triggered and collected a nice $159 for, just saying I don't think that's going to happen. I have nothing else expiring this week. And for those of you looking at this, why didn't I just let this Netflix play expire? I don't like to hold things through expiration. Like if Netflix for some reason spiked after hours, I can still get a sign, but might not know to exercise my other call to limit my loss. So that kind of thing. That's why I always just close my positions down on the date of expiration, unless it's something that, I normally close down every position. Let's just leave it at that. Realized total for the week, negative 24,000. Thank you, Baba and Wish, mostly. This week's trades, here's all those trades put in. I don't track my shares bought and sold on this, so you don't see that in here. See all the closed positions, the losses. You can see when I sold those stuff. And, you can pause the video and look through all this. Since I already talked about this in the last slide, I'm going to skip this. Wish and Baba review. Did I have to do this one? So right off the bat, I added up the columns for every play that I've done on Baba and Wish for premium, and that's negative 23,000 overall. And then Wish, I had those shares that I sold for a loss. If you add it all up together, That's 2 tickers that cost me $33,000. And this has been going on since, well, what is that, like June, probably, about. So it's just been a position that's been bleeding in my portfolio. I decided to close it out. And I know Baba and Wish actually went up the rest of the week, which, go figure. I decided to cut the losses, and it goes against me. Anyway, I think where I got in trouble with Baba is when I started playing with the zebras. The zebra itself is a good play, but what wasn't a good play is I went from having 1 or 2 zebras to being greedy and saying, oh, it was good at 185. Well, at 165, Baba can go up really much and I can make a lot more money. Let's increase those contracts. And then when it didn't happen, okay, let's just reposition. And it just kept snowballing. So rolling forever, you can see how it can snowball into a huge loss. Whereas had I just been okay with accepting a loss on the first zebra, then I would have just lost about 2,800 actually. Well, it would have been like about 5,000 here, because I would have lost all this, assuming I didn't close it out. So 27 times 2, about $5,000. But instead, I lost a lot more because I kept trying to roll and, protect that play. And then ultimately, I changed my mind and thought Baba might not go back up quickly, so let's close it down. And because even this guy had not much time left, so let's save whatever little premium was left on it. Had I had bought the shares instead, I could just hold those indefinitely until it went up, and that probably would have been fine. That probably would have been the way to go. Or if I did the Z play, that would have worked too here. Wish I had a little bit more success before this downfall here, so that kind of cancels out, but the shares I had, it still adds to the loss overall. Just be careful about your position sizing, guys. Like, I just let these positions just keep growing and growing and growing, and when the stock finally went against me, which can and probably will happen at some point, like it hurt pretty bad, like 33,000. That's a lot of money to me. Okay, so just be aware of your position sizing, and spread it out. Here are my current positions, and you can see I'm only long on MFA and NUSI right now, and I'm hoping to pick up 500 more shares of NUSI, some nice dividend-paying stocks, I guess. BMY, Chewy, all these plays here. I should have sorted this by days. I have a couple positions expiring next week. Intel, that looks pretty safe still. Pins, I was getting close to the money at one point, but I think we're good now as well. Which one is this one? Rocket 16 puts. That's actually in the money by about $1, so that might be $100 loss per contract, or about $1,000 loss. I'll take assignment of those if it comes down to it. And then you can see I also have some 15 puts on Rocket in November as well. What else we got expiring here? Virgin Galactic 20 puts. I'll probably just close those out on Monday. It's at 88%. I probably should close those out on Friday. Down here we got the Disney put spread. It's positive, but Disney did dip quite a bit this week. I think this still has 20 days left. V over here is back to neutral. At one point it was down $1,000. This one goes to 2023, and I'm just gonna let this one sit. It has a good to sell order, just sitting there waiting to get filled at whatever point that happens. Right, and here's a snapshot from TWS of my account at the end of the day. Netlick is down to 168,900. Maintenance is at 36,000 because I closed a bunch of positions, so I now have room to sell stuff. So I'm going to be doing some research this weekend to figure out what I need to sell to get my theta up, to start making up some of those losses. 2 positions I won't be playing for a while will be Wish and Baba, because I think it'd be too easy to try revenge trading on those, so those are just kind of off my watch list for a little bit. And then I guess I just want to say, like, think about your position sizing when you're putting on your plays, and then know how to manage your plays. If you want to learn how to manage your spreads, go ahead and watch this video. And good luck next week, guys.